Good morning, students. Good morning, everyone who's watching us from YouTube, and welcome again for this wonderful moment again with Sada Silcio. So allow me to share my screen, and let's begin with the topic for today. So here we're looking at US30. Here we're looking at Dow Jones. So and here basically I love starting from weekly one when I analyze. So as well, you need to start from weekly one, and it will help you guys see the long-term vision. Where is the market anticipating to go on a longer time scale, right? So once you go to weekly one, there are four things that I look for, right? I look at the current market, where it is at the higher high or lower low, and in this case, let's zoom in and let's see where is the market at, right? So I need to look at the trend. Secondly, so this is the weekly time frame, and if we check the trend, we just go back up, we just go back. So you see, it's the trend is still going up, right? Still going up. However, here, if you check, it had a little bit of a consolidation because now it was just on the same point. But because it's a weekly time frame, on a lower time frame, you're able to catch long term or faster movement. You're able to catch some trends because this is just weekly time frame. So most of people trade weekly time frame based on candlesticks, right? So the third thing I look for is the candlesticks. What is the candlestick language saying? So if we check at this candlestick, this was the opening of this candle, and this is where it closed, right? So it closed as like a bullish candlestick, meaning that more buyers got in, and they even closed above, right? So now what we need to also analyze is we need to analyze, where is our insufficiency in the market, right? Because we said that market moves from liquidity to liquidity. Market moves from the buy side to the sell side, and making sure that it fills in what we call the fair value gap in between and the insufficiency that is there, right? So in this case, I'm not going to make it too complicated like other mentors do, but I'm going to simplify it for you so that as a someone, a newbie who's in forex trading, can also understand what do we mean by that, right? So let me quickly go under my tools. I just need a horizontal ray, and I'm going to I'm going to put it on the higher high. This is my higher high, highest point of the week, and I'm going to take another one, put it on the lower low. Right. So in between, I can see it was ranging and rejecting. There are a lot of rejections, and of which, if you go to other time frames, those are levels, those are support, those are resistance, right? So, okay, now that I got my higher high, I got my lower low. So I need to check the current price where I am, right? I'm in the middle of the range, right? According to weekly pattern, based on the analysis of this higher high and also this lower low, right? So now that, because that you are in the middle, you're caught between in the middle, you need to know the direction, right? Where is the market anticipating to go, right? Is it up or down, right? So now that I said that, there are few things that I look for, just like your candlestick that is closed, just like your fair value gap that is there, and other things like your pattern, right? So, but I'll explain more what do I mean. So, because of we are on weekly one and it closed as a positive bullish candlestick, right? So, what I need to do is I need to where's my highlight? Let me put my highlight. Let me highlight some of the things that we can take as a reference. So I'm going to highlight my fair value gap. This is where it broke out and there was no spike to spike in between. That can take many times before it can get there. It doesn't have to go there straight away. And right, that doesn't have to go there straight away. So because of I've identified a level where I feel like there is a missing insufficiency that is there, right? The market can treat this as a liquidity and come back, grab this, movement that is there. Of course, there are people who have already entered somewhere here. They put their stop loss, and the market never came retested to their levels, right? So now, what I need to check is this. I can just put it as a reference for the next time to say, okay, the market never actually retested on this level. In near times, it must come back on this level. So, because now that I know that the market is short, I keep moving and look for my fair value gap until I find all of them. So, if you check here, it's already filled, right? There was one here, but already that's how it was filled here. Let's. It is filled already. And if you check the market after filling in this gap, it never came back again. Right? It never came back again. So I want you guys to learn how to catch this fast movement. That's how you're going to win, right? That's how you're going to catch and stay longer in the game and be able to enjoy your profits. So you see here on the side here, this was the closing of the this candle, and now the next candle it broke out from this previous spike, and it continued going up. It continued going up, right? But now it created another reference spike so that it can break out from this spike. So now, after breaking out from that spike, to come back, retest or fill in this insufficiency, and that's how it actually left that level, never came back again from that point, right? So in this case, we are moving away further from the sell point. We are actually striving to go up, right? But now, the other thing that you need to check as well up there at the top, we look at our insufficiencies that is there, right? So from here, the price dropped from this level until it broke out from this spike here. So until it retested again, grabbing this liquidity that is there. So now what we can say is that it is to break out from this level, right? There is no other reason why it need to retest and come back reject, right? But for a full confirmation buy, I always say for a full confirmation buy, the market must always fill in the gaps, knowing that it will never come back from that area, right? So in this case, because of weekly candle, we can then anticipate a little bit movement up to the higher high. And on the previous video, if you remember, guys, I said once you have the higher high, right, it must be at least retested 3 times. That will be your confirmation sell, right? So if, let's say, this was the first higher high and then the second one, they took this ones out, right? Meaning someone entered a buy here thinking it's continuation, but he was trapped because the bucket came back and they never released him, right? So once they came back again, because some as well, they put the stop loss as above there, they were kicked out. And the sellers as well, who positioned themselves here and put the stop loss here, they were taken out when this market went back. So the whole aim is to confuse you in the market, give you fear, greediness, and so that you don't understand at the end of the day where is the market going, right? So, but in this case, after this, what they did is after they hit them out of this level, they went back to create the first leg, right? The second leg, right? The third leg. And if you remember very well, guys, this is what I taught you last week to say that here we're talking about somewhere around how many pips? Let's calculate. Let's measure our pips. You will see this is the same example I gave you last week to say, guys, you can chase this movement, get out of the trade, and make money just like that. So this is our first leg, second leg, third leg to this point. So do you see, guys? That is like 35 bars down. That is more pips, guys. That's like from 37 to 28,000, you see. So, but on a weekly time frame, of course, on a weekly time frame, it's gonna take time before it can get there. So, but what I'm saying is, I'm teaching you guys to be swingers, right? To be long-term traders. You never go wrong with that. So, last week we said on the strategy, this is what you look for: your M. So let's quickly draw that down. We said you're looking for your M when you are at the top, right? And your M, we said that it would be like something like this, right? And then they will break out from that level, coming back down this way, right? Meaning that they understand that someone entered here on this level. The whole point is to take them out, confuse this person who entered the seller here, and then after that, once they collected the liquidity which is there, they come back down to break this point, right? And most of the time, they even do consolidation, before, knowing that they can hit them 3 times again with a spike, come back again before they really, go down, 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 down. And I did advise that, or I did emphasize that normally when they go down, right, they will go down, but then come back again, go down, coming back again. But when you check the overall pattern, it's already a downtrend or an uptrend, depending on what direction, what is the pattern. Is it an M function of M system, or is it a W function or system? So you need to check such things, right? So here's our M, and then this was our first leg, second leg, and third leg. And we said on the third leg, right, they need to create W at the top to come back with the market pattern. So check after they did, your first leg, your second leg, your third leg, right? This is like the structure. Second leg and third leg. So on the third leg, you'll notice how they need to form a W pattern on the downside. Because now from the third leg here, right, they broke it down, right? They broke this down, meaning they collecting the liquidity which is here, right? After collecting the liquidity that is there, what do? They come back. So I always teach you guys that on the downside, look for a W. right? This is a big fat W in front of your face. This is a beautiful W in front of your face, right? After the whole channeling, right? So we talked about this, guys, so many times, this patterns. And this is what I said. On a W, if they're going up, you'll notice that they will be like, and then they break this leg down and coming back again like this. And sometimes they can even hit it 3 times with come back with a spike, a big spike, to take out someone who entered here. So already they took someone who entered here, and now you're confused. And that's how they start doing their first leg, second leg, going up and down again until they reach 500 pips on the lower time frame. You know, that's how you change. That's how you chase bigger pumps. So from here, our W. So we see they hit them out from this point, took them out, and they came back again, right? Once they came back, you know they must break out this level. Once they break out from this level, it's a confirmation that, you know what, they are no longer holding up the sellers. It's a broke out to show that the market is now trying to pump up. So once they are done with this W, what do? They must, because they broke out from this level, they must at least come back, retest, you know, where they broke out from this level. So if you check, this is the breakout from this level, but I'm not happy with this breakout because according to a full breakout strategy, they must at least come back to this last red candle, which is here, the one that is here, you know. So, and then that simply means they'll be filling in the insufficiency, which is here, coming back, collecting what is left here. You understand? So, but because of they are running away from this point, here is where they are. They are running away from this point. So some of the traders, you know, they'll treat this as a trend line and say, you know what, this is a trend line. Let me put uh, my trend line here. Right? Treating it as a trend line. So knowing that if maybe it breaks out from this point going down, it must at least break out and retest as a confirmation to say I'm going down. And if it stays above, you know, they say, okay, I'm buying from this level, and my target is to at least some point here, some point here. But because of the strategy that I'm teaching you, right, put this line here on the last spike so that when they keep pushing up, you know that there's a possibility that they might take this ones who are entered here out and then come back then out. So in this case, we can then anticipate that, you know, the market wants to go up. But we know that there is unfinished business there, right? So in this case, must go up because now we see there is a liquidity here, there is a liquidity. The spikes you see here, they must be collected, they must be uh, collected. So we see there's a huge liquidity which is here, or which makes sense, you know, because now at some point, this is your order block. This is your order block. So, but because of, let me just put this first. Right? So that is where we know that this is a possibility that because this candlestick is supporting, it must, you know, at least retest this level. But because of it's at the top, higher high, what they do is they love creating the fake breakouts, right? Those fake breakouts is to confuse the traders who are already in a buy, to confuse the sellers as well, who are already, preparing for a sell. Because someone here, they think, it's an order block. Let me prepare for a sell. Let me place a sell. So now what does the market do? The market has a possibility to come back here. To go there. Let me write this. Right? It doesn't go in the straight line, right? And then because of they know people already, they're anticipating a sell from this point. The market, what does this? It does is that it continues going up to take out the people who are already here, confuse them, come back with a spike, and support those who were right, right? Support the direction of those who were right. So what I'm saying is, also be aware of fake breakouts, right? Be aware of fake breakouts. So, but in this case, we actually, what date is today? 17th. Okay, let's also check our calendar. What's happening? Sorry about that. Someone is in the kitchen. Investing.com. So I'm going to go to our calendar under tools. And we need to check each and every day, do we have any current news taking place that can affect our positions in the market? So today we do have okay, in Japan there's a holiday, market is closed, so the site. So, and what's happening here? We do have around 10. What time is it now? 32. So already started in 15 parts, right? We have the president of Lagate speaks, and this is those affecting Europe, right? So anyway, so I don't think it's gonna be any affecting because already we passed the time, right? So otherwise, there's no other news going back up down there. So tomorrow, let's check tomorrow. Tomorrow we do have CPI, right? Tomorrow we have CPI. We do have core retail sales for USD, and otherwise this core CPI for Canada. So it's going to be taking place at around 2:30, right? So, and that's what we're going to see, huge movement, right? Supporting movement if this news are strong, right? So we'll see how that turns out tomorrow. So, but otherwise, guys, wishing you the best for today. And let's see how the market goes, right? So remember, the market doesn't go in the straight line. Market, moves in impulse correcting. So be aware of that. Otherwise, let's go to lower time frame. Yeah, let's go to lower time frame before I forget. Our day one. So this is daily time frame. I'm just going to pull it through so we can see. See? So according to day one, so where we are, this was the, highest point with rejected previously. It already broke out with the spike. So it must support and break out from this level. Once it might broke out from this level, we anticipating that, we continue up since day weekly time frame supports that, right? So let's see. And this was the fair value gap that I was referring to say that there is insufficiency created somewhere here, right? For which yes, the market might filling in up, I mean down, going back up again. So there's also, I'm not happy about this, because now if it's a long-term buy, if we're saying we are really really buying for a very long time, so there must be some gaps which are filled, knowing that it's not going to come back on this level unless next time comes back on that level, collects the sellers who are which are there, or collect some buyers as well, because the aim is to collect both those who are right and those who are lost as well. So on daily one, you can see guys, we're still positive. We're going to 4 hour time frame. So on 4 hourly time frame, remember the more we reduce our time and going back and again. So that's how we're going to know where is the high chances that the market might reject, right? Where are the high chances where the market might reject? So yesterday, if you remember that strategy we were talking about, whereby I say the market love consolidating. So if you check, the similar thing here, they went to consolidate, and now they came back again on the same upside, came to collect this ones who are here. So obviously, this time as well, I say they must come and remove both of them, right? Hit them 3 times, they might, right? So after hitting them 3 times, we can even see a strong pump to the upside. So let's go to 1 hour time frame. I hope guys you're following in. I'm not moving very fast, or I'm not missing some keyword. So make sure that guys you subscribe, you comment below as well with today's topic. Uh, Tell me what you have understood about the strategy. Also practice it on your demo account, wherever. So just to make sure that you are active and you follow in line with the strategy. You're also giving us feedback. What do you really think about today's lessons? Let's engage. Let's learn together. That's how we're going to be on a successful road together and on the same page together. So if you check it on a 1 hourly time frame, it's still positive. So they decided to create a consolidation, accumulation on the same point. But we are not scared, because now, guys, I told you many times about the consolidation. The consolidation is to take out, is to create stop hunt. They use consolidation to create stop hunt, to take out those who are confused, right? So always make sure that you practice risk management, because that's the only thing that's going to help you stay long in the game. Because now if you go aggressively on the same point just because I said the market might buy, right? So not considering the fact that market doesn't move in straight point, in straight line, it might also correct impulse, but move in the same direction. Now check the market how it was moving. Let's go to the previous. So you see how the market moves. Yes, here it was pumping up, going down, pumping up, going down, pumping up, going down. So it's always impulse rejection, impulse rejection. So, and sometimes it has a bigger correction because of, like I said, market moves at a very 0 inch, right? So it doesn't even, leave a space. Because now if you check, from here, someone who entered here and then for a long time or who are trading swingers, right? They entered somewhere here, and now the market is the only time that is coming back from their level, right? To collect or take out the people who are already in. But like I say, if you understand the market, taking from the buyers, giving to the sellers, taking from the sellers, giving to the buyers, taking liquidity from the buy side, taking it to the sell side, taking liquidity from the sell side to the buy side. It is, you'll understand. Now look at this, right? So you know there's a liquidity that is left here. What do? They come back exactly on the same point to come and collect liquidity. So always when they collect liquidity, there's always a point of reference, right? Which they're chasing or going to retest on. Right? So let's try to put a line and trace that line. Which one was this one? So we put it here. So you see exactly on the same point. But now this time, they make sure that if we put it here, last spike, you see the same point that they were collecting liquidity, which is here. This spikes you see here, it's a formation of liquidity in a way. Because now once they come back, they come exactly to come and collect that liquidity which is there and run away from that side. So let's continue seeing. Let me teach you as well from the previous so you can understand how I analyze, right? This is the top, right? Like I said, it's everywhere, guys. You always see it everywhere. Let's zoom this in. Didn't I say that stop hunt are the ones that they use to collect? I mean, the consolidation is what they use to collect the liquidity and as a stop hunt. Now check at this one, right? Check this one. So here we are at the top, right? So now, ever since they went to the top, they started what? They created this leg here. Let me use this different one. They created this leg here. And what did they do? They went back to consolidation. Because now if you count these hours, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, on the same side, 14, like 14 hours on the same place, right? Not moving, not the price delivering. So what do? With this one candle, right? With this one candle, they just went out of the whole consolidation as a stop hunt, taking out the people who already positioned themselves here. There are sellers who are here who positioned themselves for a sell, but then now they got trapped here because of this consolidation. Now the market goes back again, take them out of this level, right? And some buyers as well are caught up here somewhere here, because now if you bought here thinking the market is going up, the market now closed down with you, giving you hope that it might go up again, but still beneath your structure. So you need to understand such things, right? So then from then consolidation, then broke out from this level, creating it. So what do? They run away from that point after collecting liquidity, right? They take it to the sell side. And pay attention to how they move, right? They don't move in straight line, going back up and then going down up. So, but check where they're going here, right? I said now because of this, let's rectify it here. If we check this consolidation as well here, let's draw in our consolidation point. If you check this consolidation, already I'm seeing that there's liquidity beneath this consolidation. This here, I know the market must come here and then aggressively to collect some liquidity. Because now after this breakout of this consolidation, this is the breakout, right? They went up all the way up and they never came back to retest. And we know that the market must move spike to spike, right? So at some point, we know that there is something missing. Something is missing here. Why do I put it here? Because this is the last candle on the green side, but of which within the consolidation from the breakout level, right? They use the spike as well to collect the liquidity going up. But check what do? They come back on the same point with this candle, right? To come back, collect liquidity. So now it's like, Okay, they went up. They after collecting liquidity, which is down here, they what do? They form a consolidation, right? Consolidation, wasting your time. And then by then you're thinking, ish, you're making bad decision at that time because you are not sure what's happening. They're just consolidating on the same point. But now if you check this consolidation, it's consolidating to the downside, right? Making sure that it takes this insufficiency, right? And then what do? With just one candle, and then they close here. Back to consolidation again. So now to avoid mistakes in between, right? To avoid mistakes in between, always draw your consolidation which are up and down, not in the middle. Because in the middle, that's how they also stop you out, right? So, because if you check, this consolidation is in the middle. After they collected this liquidity, they went back to consolidation, and they know there's too much liquidity which is down here, right? Each and under each and every spike, you must think of it, the price going there, you know, to take them out. So you check this level, and because of there's a liquidity that is here, now you check the possible scenario on the last candle. Which one would they retest to? You see, so we see that there is another one here, the one that we already underlined with a purple line, because now from this consolidation breakout, they never came back from this level. They started consolidation breakout, they never came back from this level. So you need to underline each and every consolidation breakout and never came back from that level. We put it here, consolidation. I mean, after this breakout, consolidation, right? Breakout never came back on this level. And then what? Consolidation, 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 broke out, never came back from this level. So we already understand. So now let's go to our current market price. Consolidation, broke out, never came back for this level. Until consolidation, consolidating. So until the price fill in, our insufficiency, then it will just consolidate, creating false move to the upside, right? Until it grab that liquidity which is down there. So we see that there's a whole lot of liquidity which is here, or which market must collect, right? So normally they use, the news event to be faster, because they know with the news event it moves faster, can come back, collect liquidity, and then run away with a big spike. You see, to fill in the sufficiency and continue with their direction. So if you check here as well, the imbalance, this leg back to consolidation, what do? They come back again, collect the liquidity which is there. Now it's balanced. They're going up again, right? And then from then, if you check, they broke out as well from this level. Now they wanted to they wanted to consolidate, because if you check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours here. And then what do? They collect liquidity which is down here on the consolidation, grabbing it up. Because if you check consolidation, come back, collect liquidity, go back. Consolidation, come back, collect liquidity. This is the stop hunt, right? The stop hunt. And then go back again. Consolidate, consolidate in the middle of the range, right? Collect liquidity, consolidate, consolidate. So if, let's say, this is what they created, maybe like your thing here. Let me draw it here. We're going to crack this down, guys. We're going to understand how the market maker thing. So here there was a consolidation, right? They grab it up, right? So let's say they created something like this, and then they went back to consolidate, 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 consolidate for many hours. This hours you see here, this consolidation you see here, right? After that, some they call it trend lines or whatever, I don't know. So they consolidate, accumulate, and then once they're done with that, they start to understand this better. Now look at the site where they consolidated and the site where they come from, right? This is where they come from. They consolidated. You must know again that they must go hit them out, take them out of this point. That's gonna be easy thing for you to understand. Oh, okay, this is my leg. Now they started consolidating. Already you'll know the direction when you see that movement. You will definitely know the direction. Once they take them out from this point, they come back. So it's the same thing that happened here. Consolidate, take them out on this point, and then come back to consolidate, right? So because of there is liquidity that is here after every consolidation, there's a liquidity which is here. And on a weekly time frame, we are not saying that we're saying yes, we are buying, we are confident about buying, but I say the market doesn't move in straight line, right? Market move from insufficiency to sufficiency, liquidity to liquidity, taking buyers out, sellers out, confuse you, make you greedy, and lose your hope in the market. And once they're done with you, that's how they're going to go into your right direction that you anticipated even long before. You see, so but because of this liquidity that is here, I'm not really happy about it. So, and I'm now then looking at my prices. Where could my market go, right? So if I check here, there was liquidity which was broken out, and the market started consolidating back here. So I'm going to put a smaller one, a smaller rejection somewhere here. So which also will see it on a lower time frame once you break it out, right? This is to track market back to back. So we know that there's also a possibility that the market might, come back here on this in this point. So we are not rushing it, right? It's on its own time. Even here it can come back on its own time. Even here it can come back on its own time. But we cannot really know where is the market going right away, right? We can only just watch and listen. What is it telling us through the candlestick, through the patterns, and what time is it, by the way? 7 minutes for an hour to close, for this 1 hour to close. So if it closed like this, so we know that there might be a little rejection here, because I told you guys the market doesn't move in straight line, right? Even if it's going up, it doesn't move in straight line. It must correct, going up, correct, going up. So let's give it a chance. Let's see on the next video when the market retest on this level. If it break out, we know that it must retest our levels. So take it step by step, right? Put your lines on the first one. Okay, this is the possibility that market might reject here because of what? It's easy, guys. Just draw your your box here. Let me draw it for you. Let me zoom it this for you so you can understand better. Just pull it down. So let me delete this again and then draw the nice one, because now we're pulling it down. Let me delete this one. So let's draw in our rectangle. So we're going to place it here on the last red candle where it rejected, because now this was consolidation, right? We can even put a box for consolidation and say this was the way the market was consolidating till it broke out from that level. Pull it in here. So once it broke out from this level, even someone might consider it as a bigger consolidation, right? Let me put it this way. Right? So this consolidation was already broken, so we want this one, the last red candle. Where's the market retesting, right? So if we check from this consolidation, it broke out, guys. It never came back again to collect the spike. I said market move with spike to spike. It never came and collect the spike, which it was here. You see, so that's why it's ranging as it like to the downside, because now if it goes like this, it means it failed to break this level, and same like this one failed to break this level. That's why it's remained down, because it failed to break this level, right? If this one close here as well, it means it failed to break this level. So chances are it must come and collect or fill in the deficiency, which is here, then going up, up, up again. So we're going to track it step by step. I'm going to, wait with you guys until it's 11 o'clock, right? Because now this was a London session which opened at 10 a.m. So normally at 10 a.m., right, during the London session, this is what they love to do, right? Towards maybe 8 a.m. to 10 a.m., they just love consolidating the same point, not giving you the direction where it's going. But watch it, right? Trust me, you watch it after 11 a.m., after 12 a.m., towards 1 a.m., there'll be crazy movement, just like this one. Just like this one. We'll see, guys. It might, because now after every London session, right, it must at least create a small movement, then consolidate, and after that, we're going to wait for 3:30, which is your New York market open. So 3 minutes left for it to close. Now while we're waiting for hourly time frame, let's go to 30 minutes and see what's happening. So you see on 30 minutes, it's consolidated, right? It consolidated, and then on the same point, so on this consolidation, what we do is we're going to put it in a box so that once it breaks out from this consolidation, we'll put it as our reference, right? But I don't like consolidation which are in the metals. So in this case, this one for me it's not valid, because it's even worse, it's on a lower time frame. So what I'm waiting for is for it to consolidate until it grab this one here, or a fast movement to the downside, of which is also can be served as a stop hunt. So normally they use 3 candles going down, or 4 candles going down. So we see only 1 minute left. Only 1 minute left, so there's no way that it can close as a buy, guys. Can you stick? Must come collect liquidity, which is here. There's liquidity that's here. Each and every consolidation, I told you guys, they use it intentionally to create what we call a stop hunt. So in that case, I'm anticipating they come this level and then collect, then go up again. If it breaks this level, then I know that we do have also a reference down there, right? Because now there's also liquidity. It's 11 o'clock. Every consolidation creates liquidity. If you check, there's liquidity as well here because of this consolidation, right? And overall, it must be a stop hunt. So that's why I don't like trading on a lower time frame. I just use them as a reference because now you'll be confused in the middle of a trend. You don't know where the market is going. You see. So like we said, consolidation, right? So now you see this one closed already. It closed, meaning that it says I failed to break this level. I failed to break this level, right? Chances are I might go and collect this one and then start going up, right? And start going up because now there's a whole lot of insufficiency which is here, guys, if you check. So to understand it better, just try to put a box where it broke out from this consolidation. Right, so that is our little bit of a box. And here's another thing, guys, that you can also learn about candlesticks. Each and every time when a new candle opens, you see this one closed. This is it closed here, right? It opened here, it closed here, right? So the other thing you can teach yourself about candlestick is that because this one is still have the new candle still have 1 hour to go before it closes, it may play around here, go here, and then come back again, close somewhere here, or continue going down, right, and dropping as big as possible. But in most cases, if you check all the candles, let's learn all these candlesticks, right? We need to understand how they function in most cases so that you don't get confused. Oh, it's buying, I'm buying. Oh, it's selling, I'm selling. No, you don't do that. You must formulate your strategy, stick to it. That's how you're going to prosper. And your rules as well. Follow your guidelines, right? If you said you're not gonna open when you haven't seen anything, don't open until you see that thing. So in this case, if it fails to hold here, we check the liquidity which is down. So if you check here, they already broke out and then they came back retest already. This one is fine. Broke out, they retested already. This is fine. Broke out, tested, consolidation. So let's wait and see until it gets to this point. So otherwise, guys, what time is it now? It's 11, right? So towards maybe 3:30 or after that, we'll come back again to check how far the US30 has done, and then we'll come back again, analyze again, taking it further step by step. We're going to take it step by step. Don't worry. So from here, we're anticipating that it might come and collect the liquidity which is here. So once it gets here, we're gonna log in again and we track it. Where can it? Where is the possible chances that it might, go to? Right? So that's what we're going to do. So otherwise, like I told you, this candlestick still have 1 hour to make even come here. Then towards the last 30 minutes or 20 minutes, come back strongly going down. So that's what also I've learned about candlesticks and the timing as well. So guys, otherwise, we had 1 hour, full 1 hour recording this. Let's cut it here. Don't forget to subscribe. Don't forget to comment and tell me what you have learned, where you need us to emphasize. And if we need to do this again and again until you get it, guys, we're going to do it with you. So this is your first, maybe it's your first day in with us. So make sure that you stay tuned with us. We're going to do so many full master classes together. So yeah, this is your female hustler, side hustle CEO, one of the female representing Africa female, right? So, and guys, don't forget we have a seminar that is or summit that is coming, and we'll invite you guys, those who want to be with us. There's a ticket that you can win to our summit. So we'll be one of the keynote speakers there, and some of the influential traders as well will be there. So you don't want to miss this out, guys. We're changing the industry, we're contributing to the industry, and we're trying to put a mark and leave a mark, help a lot of females which are there, female women traders which are there who want to learn, not only limited to genders. We're trying to build a community of allies, on crypto market, forex market, network marketing space. Now that we're even getting deeper into the prop firms, make sure you register with our prop firm link. You get a discount, and we start doing challenge. If you're a best trader, guys, I challenge you to come to this prop firm, right? So the good thing is, even though it seems like you're trading on a demo, the good thing about this challenge is you get paid for trading on a demo. So if you pass the challenge, you're good. If you buy the package, your money is refundable. You can always get it anytime when you pass your first phase, your second phase. So let's go, guys. What are you waiting for? I'm already I got so many accounts, and some I'm already giving them away for for traders who are already in my community who say I'm the best. So the whole aim is to build each other in this forex industry. It's not to laugh at each other, guys. It's to help each other to succeed. So let's see. Do you see the candle that I taught you about? That it still have time. Look, what does it do? It's taking its time. It's taking its time, folks. So otherwise, this is from Side Hustle CEO. From Side Hustle Favor Bank Motions. So we'll be giving you guys best strategies, trading with you guys in line with the market, step by step. Step by step. I know I can do this the whole day, but I don't want to take this whole time and make this YouTube long. So I'm just going to cut it out here and then say bye bye to you guys. See you next time.